Hi everyone, my name is Piterpakulski. Today we'll continue building a financial model for a clothing store or shoe store. Today we will be covering manufacturing costs. Today we have a very interesting exercise. We need to link manufacturing costs to the moment when we start selling our collections, spring-summer collection or autumn-winter collection. So today we have a very interesting story. Like, share, subscribe. You can always order financial models from scratch for your unique business ideas. We can help you with that. Also, at the end screen of this video, I will give you the link to the playlist where I will be keeping all these tutorials from scratch. And when I completely finish this model, I will give you all the links in the description of this video as well, so you will be able to watch all the tutorials absolutely free from the first one till the final overview for each model I'm building. So first of all, let's quickly run what we did during previous tutorials. So we have a rule in our model that all inputs are colored with this blue color. So these are the inputs, these are the inputs, these are the inputs. So all inputs are colored with blue. So we need to create some rule for future scenario analysis many steps ahead. When we'll be playing with inputs, we need to be able to find them very easily. So that's why we're creating unique color for all our inputs. So first of all, we are setting up the first year of our projections. Then we have two collections, and here we specify for spring-summer collection when we start selling this collection. So for example, it is March, we can set up another month. So here we're setting up the first month for the revenue from spring-summer collection. Then we have here we're setting up the list of product line for spring-summer collection. This is the pricing. We can switch on and off product line, product items from calculations. We have global and local coefficients for starting price. For scenario modeling, we have global and local coefficients for the sales plan. We can set up the level of direct costs for this or that item inside the product line. We have global and local coefficients for direct costs, so we will be using that during scenario modeling. Then the next block will be devoted to price discounting. So here is the period of our collection being inside the store. First, during the first month we have no discounts. Then the level of discounts is growing, so we can set up this level of discounts for the pricing. Then in this table we are allocating the sales plan, the 100% of units inside the sales plan between this period when our collection is inside the store. So first of all, during the first month we are selling 40% of items, then 20% of items if we, for example, allocate less or bigger amount of than 100%, we will be given here the mistake. Then we are doing the same for autumn winter collection. So the product line, pricing, sales plan, the level of direct expenses, price discounting, sales plan allocation, and then after all we are gathering the revenues. So what we need to do now, so we have here the cost of manufacturing. So we have the price, then we are assuming that 20%, for example, from this price will cost us will be the cost of manufacturing. So this is direct costs. And then when we multiply these direct costs on the sales plan, we get the manufacturing costs for the collection. Here it is. And what we have, so we need to, let's move forward. So here we have a table. So here is the moment when collection starts selling. So this moment, this is for spring summer collection. This one is the for autumn winter collection. This one, and now we need to put the cost of manufacturing prior to this moment. So for example here, and let's assume that we will have 6-month period to manufacture our collection. So we need to so for example, if we start selling our autumn winter collection in September, we need to allocate the costs here. 1, 2, 3, 4, 5, 6. And now let's create the formulas for that. So let's copy this table. So this will be end of manufacturing, 0, 1, 0. So the first step, we need to put 1, when we finish manufacturing process. And this will be a very simple task. We will be just displacing this table a little bit to the left. So now we can see that the autumn winter collection starts selling in September, and we put 1 here. Now we need to count 6-month cycle from this moment to the past. Let's create a new table. So here we will be counting months for the manufacturing cycle. Here it is. And I will go to the end of this table. So if this is more than 0, we will put 1, otherwise 0. So this will be the first formula. But for this cell I will write another formula. So if and this value equals to 0 and this value equals to 0, we will put 0. Otherwise, the second scenario, if this one is 0 and this is more than 0, we will put 1. Then if and this one is more than 0 and this one is less than 6, this is the cycle, or this is the manufacturing cycle, then we will take previous value plus 1, otherwise 0. Now let's extrapolate this formula to the bottom and to the right. So here we can see the first month, the end of manufacturing stage, and here are 6 months of manufacturing stage, then 6 months of manufacturing stage for the autumn winter collection, so what we need to do now, so we will go up and we have the cost of manufacturing for the collection, for the whole collection here, and the cost of manufacturing for autumn winter collection. And now we need to allocate these costs, manufacturing costs, inside this 6 months period. So I will create a new block of input, manufacturing costs allocation. So what I will do, manufacturing cost allocation, so we have 6 months cycle, manufacturing cycle, this is manufacturing cycle, so start selling, so this will be spring summer collection, spring-summer collection. Spring-summer collection is start selling in spring-summer collection, start selling in March. Now we need to count months backwards. So what I will do now, I will use VLOOKUPs. So I will be searching this value, this month, in this table. I will need the third column, this column, and I will need exact match. So now I know that March is the third month inside the typical year, and now I need to count months backwards. So if this minus 1 equals to 0, I will put 12, otherwise I will put this expression. Now I will use VLOOKUPs again. So I will be searching this value. Now in this table I will need the second column and exact match. This time I will freeze this table because I'm gonna extrapolate this formula to the left. So now I'm gonna extrapolate this formula to the left. Here I will be, so here will be the parameter. So this will be the inputs. So I'm coloring this area with blue. So I will create totals for this area. And here I will create the check. So here I will, so if this value equals to 1, this means okay, otherwise this will be a mistake. Now I will add conditional formatting. So if this equals to 1, the format will be, field will be green and font will be black. So for example, what we are doing, so for example, the first payment for the manufacturing will be 30%, then 5%, 5%, then 40%, and finally 15%. So this will be the payment allocation for the spring summer collection. So manufacturing cost allocation, so I will do this and I will combine these two cells. So here will be the percentage, and now I will go up So here in this table I have cost of manufacturing total. I will be taking this value. Now I'm freezing it. So I'm freezing this value, and then let's go back, and I'm multiplying on this value. So these are costs of manufacturing. Now we need to, so we have 1 2 3 4 5 6, and here we have 1 2 3 4 5 6, and now we will be linking these values to these numbers. And next step will be doing the same for autumn winter collection. So this will be autumn winter collection. Then start selling will be September. Then let's say we will have another cost allocation. For example, we will be allocating it, just a second, I will check. Okay, I will, for example, this will be 50%, 10%, then 5, 20, and 10, for example. And what we will do now, so we have the right link for that, but we will go up this time. So spring summer collection, so we don't need this value. We need to go to the autumn winter. So this is the autumn winter collection manufacturing costs total. I'm freezing these values. Here they are. So now we need to put these values and these values inside this timeline. So let's create a tab for that. So this will be manufacturing costs. So we will have spring summer collection and autumn winter collection. So if this value equals to 1, we will put this value, so 1 2 3 4 5 6, spring summer, spring summer. If this one equals to 1, I will put this, then 1 2 3 4 5 6, then 0, closing brackets, 1 2 3 4 5 6, 1 2 3 4 5 and 6. So then G, then F, E, D, C, and finally V. Now let's press enter. So now we can see these values here, so 31 200, 31 200. Now let's copy formula here. Let's drag cells here. And now let's extrapolate these formulas to the right. So now we have manufacturing costs. So these are manufacturing costs for autumn-winter collection. So we start selling this collection in September. Before September we have these costs. Then for spring-summer collection we start the revenue in March. Before March we have 6-month period of manufacturing of this collection. Now I will just consolidate revenues and manufacturing costs consolidation. So here will be revenues, here will be manufacturing costs, so I will take the revenues from our previous table. So this will be the revenue spring-summer collection plus autumn-winter collection. And manufacturing costs I will pick from here. So revenues will be green, manufacturing costs will be red because they are the expenses. this data will later go to the cash flow statement. Now let's extrapolate these formulas to the right. So now during this tutorial we've managed to allocate the manufacturing costs before we start selling the collection inside the store. We can allocate the cost of manufacturing the way we want, how we are going to pay to the manufacturer. We can do it individually, specifically for spring summer collection or autumn winter collection. The percentage of allocation can be different, specific. By the way, yeah, this everything works here. So this was the story about manufacturing costs. Like, share, subscribe. You can always order financial models from scratch for your unique business ideas. We can help you with that. At the end screen of this video I will give you the link to the playlist where I will be keeping all these tutorials, and when I completely finish this model I will give you all the links in the description of this video as well, so you may watch all the whole process from scratch till the final overview absolutely free, guys. So thank you guys for watching, see you next videos, thank you and bye.